Welcome to the Keiser Report with me, Max Keiser, and Stacy Herbert. Stacy, I don't know if you saw it or not, but the Washington Post reported on something they're calling Top Secret America. 2,000 companies in the U.S. are involved in spying, effectively, on Americans and people all over the world. And we know that the reason they're doing this is to help them manipulate markets around the world and trade on inside information. And I saw something interesting on the Financial Times today talking about the cocoa market, the fact that it's being manipulated up dramatically right now and causing starvation in countries in Africa, of course, where the price of cocoa is now absolutely destroying the economies there. And they're saying that the markets are not to blame. It's the fact that the information about the supply and demand is absent. Well, they should contact Top Secret America, those 2,000 companies that track all the data on these raw materials around the world for their own personal gain. Is it any wonder that the wealth and income gaps in America are now at historic highs? If you've got 2,000 companies doing the work for the American oligarchs and everyone else is at a complete disadvantage, that's not free market competition. That's rigged market capitalism, as we've been talking about on this show. Stacy Herbert, what else do you got?
Max, some parents are now stealing their children's credit. Yes, this is Good Morning America, and they're reporting on an alarming new trend of desperate parents in America stealing their own children's identity for financial gain. Now, apparently, according to Linda Foley of the Identity Theft Resource Center, parents are privy to children's information, and if they're desperate enough, or if they're that type of person, they seem to have no reluctance using their children's Social Security number. So if they're that type of person, but also if it's that sort of nation.
Well, it makes sense now why politicians like Sarah Palin are against abortion.
So you see, here you have the leaders of the nation. Greenspan backs end to Bush tax cuts. Congress, according to Alan Greenspan, should let all of former President Bush's 2001 and 2003 tax cuts expire to cut the long-term deficit. Mr. Greenspan's support, of course, helped persuade Congress to pass these tax cuts in 2001. It's trillions in tax cuts, and yet spending wasn't reduced.
No.
The revenue was reduced to the government, but spending accelerated because of, as you pointed out in the beginning, this huge expansion of the fourth branch of government now, which is the surveillance state.
With borrowed money. You know, Reagan wasn't a tax and spend politician. He was basically a borrow and spend politician, and he borrowed the country into its current state of bankruptcy.
Well, now Alan Greenspan is saying, oops, I shouldn't have persuaded you to do that. Of course, this is his, deathbed conversion, saying, oh, I'm sorry, I sinned.
The maestro is a fraud. We've been saying that for years. His policies are really unworkable in that all he did was stoke the biggest bubble in history, and particularly after 9/11. They brought interest rates down to levels that increased the borrowing spigot to levels now that only financed this surveillance state, Top Secret America, fourth branch of government state, and did absolutely nothing for the general population, who now finds itself in the vast majority of states, coast to coast, in negative equity on what they did with that borrowed money, go into the housing market, and now they're getting shellacked.
The housing market was used to collateralize these debts into all these derivatives, which were then sold to Europe, which kept this Ponzi scheme stealing from the American population going. So American banks sold this junk to Europe, thus continuing the whole Ponzi for another 3 or 4 years. After tumult, debt worries ease in Europe. Just 2 months ago, Europe's sovereign debt problem seemed grave enough to imperil the global economic recovery. Now, at least some investors are treating it as the crisis that wasn't. They highlight just 2 facts. Spain held an auction of 15-year bonds last week that went off without a hitch. Moody's Investor Service downgraded Portugal's debt, and yet investors didn't seem concerned.
No. I'll direct your attention to a headline I saw just a few days ago, and we'll put it up on screen there. Greece and Spain had the fortitude to kick out Goldman Sachs.
In fact, Max, that's the next headline. Europe freezes out Goldman Sachs. So according to data from Dealogic, Greece, Spain, France, and Italy have all denied the bank a leading role in their sovereign bond sales. So Greece, which used Goldman in a bond sale this year, is practically at war with the bank. The press is acting as if it's a mystery. Like, why suddenly is Europe having no problem selling their debt? But before, you had Goldman Sachs was the primary dealer, and yet they were betting against their own client. Just like in America, the deal seems to be bet against your children, bet against the future, steal from the future, steal from your population. And apparently, when you remove that element of the equation, your economy grows like a real free market.
Right. I mean, you've got a war on terror, and it's interpreted in two different ways. In the United States, they're going after men in caves that are probably long since departed, and in Europe, they're getting rid of the real terrorists, Goldman Sachs. And as a result, their economies are now doing much better.
Certainly, they're able to sell their debt easier now. So France, as the article says, hasn't used Goldman in 3 years. Quote, French people would riot in the streets if we chose Goldman, said a person familiar with the French Treasury. So this is another important ingredient where the American population has been plundered, Goldman Sachs being the primary front person for it, whether it was Hank Paulson or Lloyd Blankfein or Timothy Geithner on behalf of Goldman Sachs plundering the economy. But there's been very little rioting in the streets against the bankers. There's been rioting in the streets against their fellow citizens. But in Europe, you have resistance from the population to this sort of behavior. Yeah,
I'm trying something myself in France. Whenever anyone is caught stealing, I'm introducing the phrase they're committing a Le Goldman.
Le Goldman?
Le Goldman. So Le Goldman becomes basically a synonym for stealing, larceny, because eventually the dictionary will have to Wikipedia will have to make this change to the definition for stealing. It'll now be Lloyd Blankfein's photo on Wikipedia as the very definition of larceny, stealing, and corruption.
You know, Goldman Sachs was agreed to pay $550 million fine this week to the SEC for misleading investors about these mortgage-backed securities. And, you know, to Americans, I'm sure this looks like justice. Nobody has received any criminal fine for this. They're just paying a $550 million fine, which in the context of hundreds of billions of dollars, $750 billion handed to them by former Goldman CEO Hank Paulson, this seems like small change to me.
And of course, they don't actually pay that money. They just borrow that money from the government or from the taxpayer. And then to pay the interest on the loan, they actually engage in more market rigging, more high-frequency trading, more front-running, more high-speed trading, more flash trading. So they actually destabilize the market because they need to go in there and steal more to pay back the loan that they got from the government to pay back the fine. And, of course, this destabilizes markets. So this is the way suicide bankers like Lloyd Blankfein operate. They don't think twice about blowing themselves up, their economy, their country, and they're doing a fine job of it. Meanwhile, Europe has put up the barriers and said no more financial terrorists, no more Goldman Sachs, and presumably J.P. Morgan as well.
Well, you know, actually, Germany this week has just launched a national suicide bomber hotline, not a suicide hotline. So perhaps Lloyd Blankfein, next time he feels the inclination to destroy an economy around the world, maybe he could call this suicide hotline, suicide bomber hotline.
Well, they should put plenty of phones in Frankfurt. That's where all the suicide bankers in Germany are working. And anytime they feel like hitting a fat finger trade or putting on a collateralized debt obligation, collateralized but nothing but, you know, disease, toxic waste that is put through the extruder of somebody's quantitative analysis and codification of an algorithm that only pays off on the basis of the belly button lint being smoked by some ex-former Fed chairman, hit the suicide banker hotline.
This brings me on to the next headline, because where have all of the assets and wealth and future wealth of America been sold off to for pennies on the dollar, basically? So all the jobs have been exported to where? China. All of the assets have been sold off to where? China, who own many of the U.S. Treasury bonds, but also the housing bonds, the Fannie and Freddie bonds. So China should cut U.S. Treasury holdings, economist says. So this is two economists in the state media. Yu Yongdong, a former academic advisor to the central bank, wrote that although assets in other currencies and forms are not ideal replacement for U.S. Treasury bonds, diversification should be a basic principle. When demand for U.S. Treasury securities is strong, it's a rare opportunity for us to gradually pull back. So these are the same sort of, speaking of Alan Greenspan, who used to send subtle signals to the market insiders about what his next move was. Of course, nobody in the population knew how to read Alan Greenspan, but he was sending them signals of what to do to protect themselves. These are the same sort of equivalent in China. These economists are telling people what the program will be very soon. Now, Zhang Monan, another economist who works with the state, told the paper also that China should invest more of its $2.5 trillion of foreign exchange reserves in hard assets such as gold.
Well, they're selling the dollar on rallies, and they're buying gold on dips. It's the China put. Anytime gold comes in, the price moves down. China's there. Buy, buy, buy. It's a one-way trade.
And they've got a fantastic thing because it goes with the previous story about the Europeans holding all these debts. Now, the Europeans hold the debts that are denominated in dollars. So every time another rung of the financial system collapses, the Europeans have to buy dollars in order to close these bogus debts. So the Chinese know that there's always a buyer, basically a forced buyer of these debts that they hold.
That's right. In 2008, when we saw massive unwinding, the dollar rallied because for that exact reason, to get out of the dollar, you had to buy dollars, paradoxically enough. But the effect of that paradoxical unwinding dollar trade is waning until the point where the dollar gets to the edge of the cliff and then adios, muchachos.
And another thing, as we've sent all of our wealth over to China, that is shown in this headline, China, now world's biggest energy user. So China overtook the U.S. last year to become the world's biggest energy user, the International Energy Agency said this week. Now, this makes Beijing's new status is expected to make it more influential in global energy markets in determining prices and how it is used.
Well, Israel better make friends with China real quick because Saudi Arabia is looking like they're going to be courting favor with another country other than the United States.
But this also, in terms of the currency, now this is another leg down for the U.S. currency because China, as can say they're playing nice on the global markets by revaluing their yuan, letting it float up. And of course, that gives their own consumers more purchasing power as they're able to buy more oil because thanks to the Saudis, they're willing to price it in this junk currency of the U.S. dollar. So the Chinese can make it very easier and nice for their own population.
Fantastic.
One quick final headline to go with this whole American-style capitalism of just stealing from the population. China warns tourists on forced shopping in Hong Kong. Now recall that Milton Friedman said, quote, "If you want to see capitalism in action, go to Hong Kong." Well, apparently, there's been these a few events of Hong Kong tour guides ripping off Chinese visitors from the mainland by forcing them to buy things. And the tour guide is caught on camera in this one situation where he said, how can there be free lunches in this world, forcing them to consume and buy these junk products?
Well, America used to have forced consumption. China was forced labor. Now it's the other way around. We're seeing forced consumption in China, and the U.S. is turning into a forced labor camp. Stacy Herbert, thanks again for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay tuned. Welcome back to the Keiser Report. Time now to go to Massachusetts and speak with Gregor McDonald. He's an oil analyst and energy sector investor with his own website, gregor.us. Gregor, welcome to the Keiser Report.
It's great to be here, Max.
Gregor, you recently wrote a post, Hollow Men of Economics. Tell us about it. Who are the hollow men and why are they hollow?
Max, the hollow men of economics are essentially the entire post-war economics establishment, which since World War II has essentially ignored energy as a component of our economy. Now, of course, they paid some attention to that during the original OPEC shocks of the 1970s. But since that time, Max, there's sort of been a common agreement among the economics establishment that energy no longer plays a significant part of the U.S. economy. And as you can see from my chart, in the last 10 years, energy as a component of American GDP absolutely zoomed upwards from the early 2000s towards 2008. So I think that, that kind of describes at least a little bit of what they're missing.
Right. So the chart available on your site is U.S. energy expenditure as a percentage of GDP from 1999 through 2008. And as you can see by the chart, this is climbing. And yet what your assertion is that this rendezvous with energy insufficiency has been completely ignored by the current group of the hollow men of economics, the folks we read in the New York Times and elsewhere. They simply don't take this on board and factor it into their model.
No, they don't. And I've done a lot of work both on the national economy and also state economies. I've done a tremendous amount of work, for example, on California. And a lot of the big Southern California counties like San Bernardino and Riverside counties, where people are very exposed to energy and gasoline prices as a result of having to drive long distances. And I tell you, Max, the economic sensitivity of the United States and of many of our regions is still very, very high to high energy prices. And so, we've seen real devastation in places like Southern California with broad unemployment still tracking in the high teens, very high usage of food stamps. And, as you can see from the chart on a national basis, I think we got close to up above 9.5% of energy usage for GDP here in the States.
Yeah, I get questioned all the time from people who want to know why in America are people so complacent? With the economy collapsing the way it is, why do people seem so apathetic? And the answer I come up with is that as long as the price of gas is still relatively cheap, nobody really notices it. But going back to when oil got to 147, of course, then the energy costs hit home in a big way. And within a few short weeks, the economy completely crumbled. And those people who were caught out in what are called the exurbs were literally just abandoned out there in these exurbs. They had no way to move around, and they were just became an immediate underclass in America. Now, talking about this 147 price, do you think there's any connection between that 147 price, the overall action in the market, and where will prices go from here, in your opinion?
We've got a lot of difficulties with price right now, Max, because my view is that anytime price goes below $75 a barrel, no one who is in charge of making decisions about developing new barrels of oil will decide to go forward with a project. Prices below $75 a barrel are simply not enough to create new supply of oil. Meanwhile, in the background of global oil supply, we have a natural decline rate from existing fields that is at very least 5% a year and may be as high as 6 or 7% a year. So if you're in a world of 72 million barrels a day of production and you're losing a couple of million barrels a day to decline, you've got to come up with fresh barrels, equal to roughly Iran's production of 3 to 4 million barrels a day each year just to stay in place.
Now, tell us about this. On your site, you also have a chart for crude oil supply, 2004 to 2010. Where are the oil supplies falling off the fastest around the world? Where's peak oil hitting the hardest?
It's hitting non-OPEC the hardest. And, OPEC produces roughly 40% of global oil supply, and non-OPEC produces 60% of global oil supply. But it's in non-OPEC that's largely governed by the private companies with all their PhDs and high technology equipment and airplanes that fly over the Gulf of Mexico with radio spectroscopy equipment and drill down to 25,000 feet below the surface of the ocean. It's in that region that supply is declining. And, it's in non-OPEC where the decline is really taking place. In fact, if you look at that global supply chart, in 2005, in 2006, and in 2007, oil supply fell every year in the face of rising prices. In other words, once oil crossed 40 in 2004, a lot of people anticipated, oh, we'll have more supply. And this really brings us back around to the hollow men of economics, Max, because their main view about energy is that higher prices always bring on more supply. They just feel that, expansion of credit, stimulus, inducements, that will cause supply to come on in greater volumes. And it's just not the case. It's just not in the data.
Right. There's three super fields, if you will. There's Cantarell in Mexico, Bergen in Kuwait, and Ghawar in Saudi Arabia. And we've got Cantarell in Mexico, like falling off a cliff in terms of what they're being able to pull out from there. Bergen, I understand, in Kuwait is also similarly affected. Now, Ghawar in Saudi Arabia, they've been auditing for 10 years, but magically they don't seem to ever run out of production. And the feeling is around the world that the Saudis are, I guess, to put it kindly, are lying. It seems impossible that they could possibly not be experiencing the kind of declines that we're seeing in these other major fields or in fields around the world. Would you agree with that?
Here's how I come to that question. Why did the Saudi Arabians develop a new field called Keiser at enormous expense, multi-billion-dollar new field that has to have its oil pumped out with seawater that comes from 15 miles away? And you look at pictures of this new field that Saudi Arabia has developed, Keiser. It looks like an oil sands project, like you have in Alberta, with all sorts of processing and steel in the ground to process the oil. Why would Saudi Arabia build and develop such a field if there was easier oil in Saudi Arabia, if there was more oil, the stick the straw in the sand kind of oil? Why would they do that? And I think that really the best answer that I use for Ghawar, going to your question about Ghawar, is that Ghawar production can be sustained, but it not easily. And if they try to increase production from Ghawar, there's been a number of indications from Saudi Arabia that they're concerned about damaging what remains in Ghawar. So I think that, what people don't understand about Saudi Arabian politics is that Saudi Arabia has a long history of deriving political power in the world from being able to advance the idea that they are the number one supplier in the world, that they control all the spare capacity, that they could either crush price by pumping more or really send price skyrocketing by pumping less. But the fact is, Max, Russia has now eclipsed Saudi Arabia as the number one world supplier.
That's amazing. I don't think a lot of people are aware of that. Let's talk about the big geopolitical gamesmanship here for a second.
Sure.
We know that to process every barrel of oil, it takes something like 2.5 barrels of water, fresh water. And we know that the U.S. has invaded Iraq to exploit their oil, but unfortunately the water feeding that area flows through Turkey. And now the news coming out of the Mideast is that Israel has taken a very antagonistic position toward Turkey. Is there a connection here? Is one of the reasons we see Israel now gunning on Turkey the fact that the Euphrates River, as it flows through Iraq, is really strategically flowing through Turkey, and this is what is causing some geopolitical tension in that area? Your thoughts?
Well, I'll hit that question in two ways. First, from the oil geology side, and then from the water side. One thing we may be understanding now is that the dark years of Saddam Hussein's tyrannical rule in Iraq may have resulted in tremendous damage to the fields down in central and southern Iraq, but not tremendous damage to the fields in northern Iraq. And it's that oil that is now flowing much more easily in northern Iraq that has become the point of contention. There's a lot of dreaming going on currently about the ability of central and southern Iraq to significantly increase oil supply in the years ahead. I'm just not convinced that that's the case. I do agree that there's a wonderful resource base there, but it is possible to damage your fields geologically over a 25-year period, and I think Saddam Hussein may have done that. Now, to the water point, we also know that the great marshlands of central Iraq were destroyed during Saddam's time there. And I think the water issue, Max, in terms of oil, is more of an issue in terms of refining, and perhaps less of an issue in terms of pumping, unless you're Saudi Arabia and you've got to pump, seawater, you've got to pump seawater. So it's, Israel has always had a significant water problem. In fact, when I visited Israel back in 1984 as a university student and was taken around Israel by a representative from their Department of the Interior, this is almost an exact quote. He said, you can read the headlines, you can read about all the causes of the problems, but he said our main problem is water.
All right. Gregor McDonald, thanks so much for being on the Keiser Report.
Thank you, Max. It was great to be with you.
Okay, and that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and Gregor McDonald. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.